Guys, welcome back to We Talk Money. Trav, good to see you again, man.
Yes.
We're finally here back in Austin. We've been traveling through Mexico and other places, but
the gang is back, baby.
Yeah.
And I don't know, have you guys heard of this little asset called Bitcoin?
Huh? That sounds like a scam.
It's definitely, yeah, it's, the governments hate it and therefore it's probably useful. And it squeezed the hell out of shorts last week and has been ripping today to a new yearly high back above $50,000. And today in the Daily Dough, hopefully everybody is subscribed, but Trav wrote about inflation, which we'll talk about because everybody was freaking out yesterday when the inflation numbers came out. But I made a case that Wall Street is actually in love with Bitcoin.
Of course they are.
Here on Valentine's Day, which is when we're recording this. You guys will probably get this video or podcast tomorrow. But Wall Street has been buying the crap out of these Bitcoin ETFs to the tune of over $500 million a day. But I made the case that retail isn't even here yet. If you look at the Google Trends data and a survey that I did on X or Twitter, over half of my folks said they don't think we're going to hit a new all-time high this year, which was interesting.
Wow, that's very interesting.
Yeah, so
we should unpack that.
Yeah, retail is still skeptical, but Wall Street is just going ham on these ETFs.
I mean, we could sneeze and be at all-time highs in Bitcoin.
Yeah.
No, yeah.
We're now less than 25% from all-time highs. But the Japanese yen, I just posted this chart. If you look at Bitcoin compared to the yen, it is knocking on the all-time high. And with a lot of other shit fiat currencies, they're already breaking out to new all-time highs. So,
which is really interesting when you think about it, because, you know, Bitcoin is a global asset and you do have interesting buying pressure that could come from other countries where, or already is coming from other countries where Bitcoin's hitting new all-time highs. So it's funny that we're constantly, as US-based investors, thinking about all-time highs in dollars and what that could mean and the interest that that could bring. But, you know, when it's hitting all-time highs in yen, I mean, what are the Japanese investors saying? What are the Japanese retail investors doing with
They're happy.
Exactly.
Having a wealth effect maybe
Yes.
happening over there too with
Yes.
this. I don't know.
I've seen some wealthy crypto folks recently in Japan, and I'm like, oh yeah, that makes sense. If you got some Bitcoin, it's doing pretty damn well over there. So, man, we've got a lot to talk about. Nick, do you want to talk about our sponsor for today, Seeking Alpha? How do you guys use this?
Oh, man.
Yeah.
We use Seeking Alpha a lot.
daily.
Daily, absolutely. Seeking Alpha basically is where we do a lot of deep diving into transcripts and news, you know, breaking news. So I get a lot of sentiment gauging from a lot of the articles that get written, you know, about different tickers. I have a YouTube video actually going through how I use Seeking Alpha, but the link in the description below will get you guys.
Yeah, go to wetalkmoney.com/alpha and you can check it out. And yeah, we'll link it up in the video description as well. But thanks to Seeking Alpha for sponsoring the show. Let's talk about inflation.
Yeah,
What
I want
is
to start
happening?
there because
The markets were like dumping and panicking yesterday on like a little bit of an uptick.
I want to hear Trav's perspective. Give it to us. I know you wrote about this in the Daily Dough, but
Yeah, and to be frank, I'm getting a little tired of talking about inflation. It's been on our minds.
I know you're so annoyed with it.
I know. It's been 3 years we've been talking about this and hammering on this subject, but it is very important. It dictates what happens to the path of interest rates, which often dictates what happens to the path of asset prices across the world. So it's a very big deal. Yeah, yesterday was really interesting. Yesterday, we had a CPI that came in at 3.1% year over year, which was actually lower than the prior month. But people freaked out because economists were expecting it to come in as low as like 2.9%. And so we thought we were going to get a sub 3 number. We got a little bit hotter number. There were some areas within the CPI, some components that looked a little scary in terms of like, you know, reigniting a little bit.
Which one specifically?
Well, shelter was really the big one. And,
Right.
you know, shelter is so weird. So when you dive a little bit deeper into the components, like I said in the Daily Doe that I don't think this is a reason to freak out. We're still on the disinflation path, and shelter is really the one component that's been holding CPI up above 3% for a while now, because their measures of shelter costs in the CPI are so lagged and so flawed. And there's a really strange, if you scroll down a little bit here, we'll show this chart. The OER measure, which tries to capture like shelter costs, 18 months ago in the CPI, it has decoupled in this most recent CPI release from the other measure of rent within the CPI, and certainly from the actual real-time rent prices that we get from companies like Zillow or other companies like Redfin that track these in real time. So there was a weird divergence. And I think we're actually going to see that divergence collapse in maybe the next CPI report or the one after. And then this whole narrative will flip once again back to, oh, wait, CPI is cooling. We're back in the twos again. All is well. The Fed can actually talk about cutting again. But yesterday, it was a little freaky that, it came in higher than expected and shelter's not coming down as fast as we expected. And so it's like the market actually pushed the probabilities of rate cuts. The first rate cut from the Fed is now being priced in for the June meeting rather than the May meeting.
Yeah, it keeps getting pushed back, right? First it was March, then May, now maybe summer. Do you think that's legit, or is this going to keep getting pushed out?
I think it's probably, I'm still thinking probably May is still in play for a cut, because we still have quite a few reports from whether it's the CPI or the PPI that will come out, unemployment reports, et cetera. So there's a lot that can still happen between now and then. But I did say, late last year, as we were getting something like 7 or 8 rate cuts priced into the market, and we had a lot of euphoria in 2023, I did say the market may have moved a little bit too far too fast in terms of pricing those cuts. So I think actually we're getting back to a place where we're kind of in line with my expectations. But I still think rate cuts are in play for May. I've started to hear people talk about rate hikes again. I think that's insane. I don't think we're anywhere close to having that. And I do think this weird shelter thing is going to reverse itself in the next month or two. So overall, I think nothing has changed. I really don't think that the narrative around inflation and rate cuts has changed, really. These little 1-month data releases can sometimes freak investors out and cause like these whipsaws. But really, I think the overall narrative is still the same. We're going to get cuts this year, and rates are probably too high as they are right now. We're going to get little baby cuts to start. It'll be 25 basis points, and whether it's May or June probably doesn't matter that much. So yeah, overall, I said in the Daily Doe, let's not freak out too much about 1-month data points, especially when they have like noise and things that could get revised later on. So yeah.
Services were also like other services outside of, rent. There was transportation looked like a standout in terms of high, inflation.
Yep.
Year over year. Car insurance was 20%. So yeah, but a positive for you is airline fares are down.
Are they coming down? Really?
Coming down.
Awesome. Okay.
So I guess between the rent and the shelter, transportation, the shelter and the services, certain services, that's what spooked everybody. Yeah. I believe.
Interesting though. I mean, if you look at the overall CPI minus shelter costs, it was just plus 1.5% year over year. So even with the services, the non-shelter services in there, pushing the numbers up, you still overall had 1.5. Yeah. So it looks relatively benign. If you're using, rental prices in real time, like Trueflation does or Zillow or whoever, you're getting like below 2% current inflation numbers.
So. Yeah. I mean, if you look at the Trueflation chart here, I mean, it's absolutely downtrending pretty damn quickly.
Yeah.
So, cool. And, the markets actually did recover. So yesterday, stonks were down like 1% or 2 in the S&P and the NASDAQ. But today you can see they kind of caught a bid and they're bouncing a little bit. So the panic, I guess, was kind of short.
Yeah, very short. I mean, the AI stocks didn't even go down.
Yeah, what's the crazy rack
SMCI?
SMCI.
Yeah,
yes.
That's been.
So let's talk about what's happening with AI. I mean, this is like AI.
Yeah.
This
Not
is what's
done with AI.
propping up the whole market, right? NVIDIA.
Yep.
Thank you, Nancy Pelosi, for the trade idea. She's up, I think over 50% on this trade.
Yeah,
I
think she even had some options as part of the trade that are up a couple 100%.
Yeah, she's up a couple mil, I think, so far this year. So, man, what a great trader. here.
Pelosi
And then,
strikes again.
And then on the other end of the spectrum, you got Jim Cramer, who, oh my God. I mean, the counter trading memes are just like, they're funny, but they're so damn true because I mean, literally down here on the pullback in Bitcoin, he's saying like, what'd he say? Like Bitcoin's not going to catch a bid, or I don't like Bitcoin here. I mean, it's uncanny how wrong he is and then how right Nancy Pelosi is.
Oh boy.
Oh man. But yeah, fun times in the crypto markets, man. I mean, the flows are definitely, heating up. Just so much wild stuff to see, and especially like even on like altcoins and Ethereum and a lot of the large caps, like Ethereum just made a new yearly high so far this year. Been buying back in the low 2000s again. I mean, this has just been one of my best like cycle traders, just been absolutely crushing Ethereum since the early days when we started trading this at $1. And here we are again in the upper 2000 range. So as far as like a volatile asset goes, is for active traders, it's hard to find something better than this.
Mm.
The miners in the stock world have been really crazy.
And the crypto miners have been
going
bananas.
Mara, Riot, a lot of people in the community have been trading these and doing really well on them. So it's been nice to have some Bitcoin proxies in the stock world to trade.
Yep.
Yeah. Some of these are just like gap machines, just really ripping. And it's interesting though, because some of them like just kind of underperform and die out. What do you guys think is the major difference between the ones that actually outperform Bitcoin and the ones here like SDIG that just kind of are floundering out? Like, are these companies just dying, or their economics screwed up? Have you guys done much of a deep dive into this?
I've done a pretty good dive on the miners. A couple things that tend to create some differentiation between them is, how much Bitcoin do they actually hold on balance sheet? How much are they hodling versus, selling every quarter? Mm-hmm. Some of those miners, just by virtue of their financial position, have to sell almost everything they produce every quarter. Others like Mara have been able to hodl a bit more on balance sheet. So those have done a little bit better. Then you have some that actually operationally also execute a little bit better. CleanSpark, this past week had a beat in terms of earnings. And it was surprising because you'd think you'd be able to model that very well in terms of, if you know the number of miners. A lot of these miners produce results either weekly or monthly, where they put out press releases showing how much mining capacity they have, how much is running, their exahash, et cetera. So you'd think that they wouldn't be able to beat analyst expectations, but CleanSpark actually beat the revenue expectations last week when they reported, and so that helped it gap up more. So you do have some individual situations like that where they're just operationally executing better than some others, and that helps too.
Awesome, man. Yeah.
Also, there's short interest on a few of these, high short interest, and that helps the momentum when Bitcoin is actually running. These momentum, I'll call them momentum miners. They're moving too, and the short interest helps.
Yeah, that's actually one thing that I've been talking about on Twitter recently, because there's been some very public Bitcoin shorts that have been getting their faces ripped off lately. And yeah, a lot of people don't realize that the more shorts you have on an asset, and you can see that with the short interest on the stock, and there's ways to view that in different Bitcoin derivatives, but the more shorts you have actively open, that's actually bullish pressure. If those start to get squeezed, it's kind of like a reflexive.
It's my favorite kind of trade. I mean, literally these days for my swing trades, I'm looking for high short interest. I'm looking for like that contrarian viewpoint, and it works.
It does.
But you have to time it right? You can't be too early.
Yeah.
Absolutely. What happened with Lyft yesterday?
Oh man,
I saw everybody was going nuts. Did they had like a
Someone
finger mistake?
fingered. Yeah,
this was one of the weirdest things I've seen in a hot minute in stocks. So we actually called this out in the Daily Dough a few weeks ago. Lyft as a potential investment opportunity. I also tweeted a bit about it a couple weeks ago, and the big reason behind that was fundamentally Lyft has been slowly improving their profitability, getting to cash flow positive over the past few quarters. They have been lagging Uber in terms of their overall revenue growth, but they're still growing. And again, pretty big focus on profitability over the past couple quarters. And so I said, Lyft is trading at a huge valuation discount to Uber. And, it is the number 2, probably a far distant number 2, but it's still a decent sized business in what is basically an oligopoly in ride sharing. So I saw some value in it. And what I didn't expect was that, when they released their earnings, I thought earnings would be pretty solid. They came out and they said, oh yeah, we're going to increase our margins by 500 basis points, which is basically 5% off of, and that's a big deal because Lyft has, almost, I think like 1% margin. So to go from like 1% profit margins to 6% is a huge change.
Yeah.
And so the stock gapped up, 60, 70, whatever.
67%.
Yeah, it was like, I think at one point
Almost
it may have
70%.
even reached 80 or 90%. Yeah, almost
Wow.
a double after hours.
And then the whole thing came all the way down. I watched it live. I was like, what in the hell is happening right now?
Yeah, for you guys watching the video, this is the post-market, this yellow shaded area. This is the post-market price action. You can see it went from, basically like 11 or 12 bucks to 20 in the span of 45 minutes and then came right back down in 15 minutes.
Well, apparently on the call, one of the analysts brought it up to them in the call, is how I understood it.
Yeah, and
But-
they
so
called out the mistake.
Yeah, that's how I understood it. Maybe that was incorrect. That was what Bloomberg reported.
no, and that to me is the most shocking thing. So basically what happened was they said we're going to have, in the press release, they said we're going to have 500 basis points or 5% of margin improvement this year, when in reality they meant 50 basis points or a 0.5% margin improvement this year. So that's obviously a huge difference. So on the conference call, an analyst brought this up and said, I want you to clarify, because I think I heard you say in your earlier comments on the call, you said 50 basis points, but the press release says 500. And then the CFO says, oh yeah, our bad. We meant 50 basis points. And this was shocking, obviously because of the mistake, but also shocking because the management team didn't proactively call out that they had made a mistake in the press release. They waited for an analyst. Like, would they have just let this go if an analyst had not
That's
asked
what
the question?
I'm wondering. And
Like-
then what would have happened with the stock price?
Right?
But management probably would have been like, why is our stock up 60%? Like, this is weird.
I mean, is there some kind of like manipulation here, or like, are they going to find like some insider trading or?
That is a big question. And it's possible it was just a mistake and they didn't even realize they made a mistake until someone called it out. That's possible. It's also possible that, that there was some weird like insider trading happening or I would say it's probably unlikely that's the case because, if you're a CFO of a major public company, like, are you going to risk your career over, somebody
Probably not.
making some bucks? Probably not. But, still, I was shocked at just like the incompetence of it, but also the fact that they didn't really proactively address it. And so, that to me is kind of a loss of credibility.
Yeah.
And so it made me question the Lyft financial management team there.
So yeah, some intern was definitely insider trading. That's what I'm going with.
Are there going to be there's going to be lawsuits, I imagine.
Potentially, yeah. I mean, there's potentially some people that lost a lot of money after
That's what I'm
hours.
saying, yeah.
Shorts definitely got liquidated.
Imagine, well, I think it did have a bit of a short interest on it, actually,
yeah.
for one, because that's why I brought it up because of that. And also, I think that there are people that probably bought it thinking that this margin improvement was true, and then boom, rug pull.
Yeah.
Yep.
So
Ouch.
I don't know.
I mean, it is up still 30% today.
Yeah,
because
that's
the
true.
results were decent, but
It's still quite a ways off from the IPO price.
Oh yeah,
But I mean, it is kind of a rounding pattern here. And
well, I
don't
wrote
know.
about that in the Daily Doe, and I should have added Lyft as one of those charts on this, but there's a lot of this going on in the markets right now with stocks. I call them bottoming breakouts. So basically, a lot of bottoming breakout patterns are forming, and Lyft can be
Got it.
added to that list.
so you've got Robinhood, you've got Carvana, Upwork. Yeah, a lot of
there's
these
a number
charts.
of them, but
You guys just listening to the audio, it's basically in crypto, we call this like an accumulation range breakout where it's been flat and down and beat and choppy for a year, 2 or 3. And then all of a sudden, once it breaks that first resistance area, yeah, things can really start to get weird. So yeah, it's interesting to see these like inverse head and shoulder patterns too, like on Carvana and Robinhood and things like that.
yeah. So we'll be watching those.
So yeah, I don't know. So the Magnificent Seven or whatever we're calling them have been dominating a lot of the gains. Do you think we're going to see some of these beat stocks start to make a comeback, or is this going to be a value trap and we're going to go into the Great Depression as Robert Kiyosaki has predicted
Oh my
4,000
God,
times over the past
Robert.
20 years?
Yeah, it's a great question. I said when I previewed 2024 back in late December, early January, I said, I think this could be a cool off year for the NASDAQ and maybe we'll get some catch up from small caps. That hasn't happened yet. I mean, NASDAQ and S&P are up 5%-ish year to date with the Russell Index down year to date. So it hasn't happened yet. I do still think if once we get to the rate cut environment, I do think it's more likely we could have some of those other stocks really catching up. And we, like Nikki pointed out, we are seeing actually some good action underneath the surface in some of these stocks. It's just, I think we'll really start to see that when we get into a lower rate environment and small caps can hopefully participate a little bit more.
Yeah. Makes sense. Nick, how's the consumer? How's the saver? What's going on over here with the 401k balances?
Well, I just came across this article in Seeking Alpha, and I thought it was a little positive article that we're seeing. I was going through some Bank of America data on the consumer, found some information on like consumer banking balances in comparison to 2019, and came across that 401k balances have increased 15%. Health savings account, that's really why I kind of pointed this out, because health savings accounts are basically, they can be used as investment accounts that you can just invest your money in an S&P index fund or something and use it for tax-free medical expenses. And it's nice to see that people are, it's tax advantaged. So it's nice to see that people are utilizing that and increasing their money into those accounts. But I don't know, just a little bit of a positive that maybe consumers are feeling this wealth effect a little bit from the market being at all-time highs. A lot of people, I think over 50% of Americans do own stocks now, whether it's in a 401k or taxable brokerage. That's been, increasing. And a lot of the middle class, that's where they build their wealth. They build it in real estate and they build it in things like health savings accounts and 401ks. So I just thought that was a good thing.
Yeah.
The consumer banking data from Bank of America from their last report was interesting. I don't have the visual. I have it right here, but that specific bank is still showing balances in checking and savings accounts above pre-pandemic levels. So that's interesting. It's been drawing down basically every single quarter, but still above 2019 levels. That's specific to Bank of America, but that's one of the big ones. So I think that there are definitely cracks showing, with the middle class consumer, the lower income consumer. But overall, it does seem like this economy is kind of continuing to chug and the consumer's continuing to spend. I think the last retail sales data that we got, it was pretty decent. So
is it just me, or is like my Twitter feed, is it just all still bear porn and fear? Like, or are your feeds different? Because for me, you wouldn't think there's any positive data out there. Like when you look at data like this and then you go on Twitter, it's like you see nothing. It's only fear. Is it the same for you guys, or is that just my feed?
It's a little better than it was, I think, last year for me, but I still see amplification of bearish narratives all the time.
Yeah.
It definitely seems to get more engagement, whether it's Twitter or YouTube or any of those platforms. I definitely see more of that than bullish stuff.
Yeah. It's strange. The stuff that I see that is the most viral is just completely fear-based narratives. And a lot of times I look at it and I'm like, are we looking at the same data? Because, things just, they're not lining up here,
Yeah, I actually have a video I'm about to do on my YouTube about this. I got a comment on one of my videos and she said, laughing my ass off, who has the excess cash in this economy to be investing? So I actually dug into the data. And believe it or not, the bottom 50% is not doing as bad as everybody thinks in terms of net worth, balances, growing. So I'm going to put that out and really dig into the data to kind of explain, like, is everybody broke or not broke? Like, what's the deal? Because there's all these different narratives we're getting. But the bottom line is there's always been haves and have-nots in our economy. I mean, there's always been people that have had savings and, investments, and people that are struggling to get by. And that's just continuing to happen. But, when I look at the data, it's like, when we look at everybody as a whole, and it does seem like things aren't as bad as it's being portrayed. That's kind of my take. But
Makes sense.
Stay tuned for the YouTube video, and I'll show all the data that I found, and we'll come to that conclusion together.
Cool. Okay. Well, talking about feedback and comments, I reached out to my Twitter /X/ whatever we're calling it audience and asked for some questions. So we got several questions here. First one is from Pumpkin Spiced, Mr. Pumpkin. In a hypothetical situation, if a U.S. resident were about to make life-changing money in crypto this year, possibly in the millions, what are some less conventional strategies for tax optimization and identifying investment opportunities tailored for those with substantial capital? So basically, if somebody's going to make a lot of money in crypto this year, which I think, we all know people in the community and people on social media that are probably going to do very well this year or have done well, especially after a big 2023 in the crypto markets. Nikki, Miss Financial Planner, what are some strategies that people can use to minimize taxes?
I'll tell you one right off the bat. Selling strategies. Selling it all at one time and realizing a massive capital gain in the same year. One strategy could be maybe you sell some and then you wait until January 1st hits and then you sell more to try to minimize capital gains in one given year, because you could be ending up pushing yourself from one bracket to the next, and it could be a pretty significant percentage difference. Of course, with that said, we don't want the tax tail to wag the what is it? I'm not saying that right.
Yeah, you don't want to mismanage a trade just to try to save.
You don't, yeah. Like if Bitcoin goes crazy and it's like, I have to sell now, there's no waiting, then you have to do what you have to do. But definitely try to keep tax brackets in mind and manage like, okay, I have X hundreds of thousands of dollars before I move into the next bracket. Because once you get into the highest capital gains bracket, not only it's the highest, but they also tack on extra tax.
Yeah. So I think that's a pretty conventional thing, right?
Yeah.
I mean, that's not super creative, but one thing that comes to mind is like if you're an entrepreneur, you can set up your own pension plan where you can take about $500,000 off of the top, right?
Well, you need income in your business to do that. So
Right.
if this is a capital gain income, you have to have income in your business to do that.
Right.
So that could work if you have a business making a lot of money and then you have, this capital gain you could offset by opening a pension or even opening like a solo 401k if you don't have one and trying to get 60 something K in that. And, there are those little things, but it's tough because with stocks and crypto, it's like real estate, you could 1031 exchange.
Mm-hmm.
Small business stock like startup investing. There's actually something, I think it's called a 1045 exchange. So you can do with that, or you can get tax-free gains with angel investments, right?
QSBS.
QSBS, yep. And so with equities and Bitcoin, it's kind of a little bit harder. You can invest in opportunity zones, but that has its own issues.
Yeah. Another way to maybe kind of be a little less conventional is through lending, where you don't actually sell the asset, but you kind of borrow against it. That comes with its own risks, but we don't have to spend too much time on
You can also harvest losses.
Right.
Yeah.
Harvest losses to
I think this is a good question to ask, and it's something you want to think about and talk to your tax pro about before you start to realize a bunch of gains, because we've all talked to people both in the community and just in general that have made a lot of money either in crypto or stocks, and they didn't think about the taxes up front, and then they actually end up kind of screwed down the road.
Yeah. And especially if your strategy is you're going to hold some anyway, it's like, okay, well, let's just break this up over a few years.
Yeah.
But it depends on your tax bracket.
Especially if you can defer and get into the long-term capital gains treatment.
Yeah.
Yeah, on the stock side, those are the things I typically think about. Okay, can I get this to long-term cap gains holding period to essentially cut the tax rate in half? Can I realize some losses on some other positions to try to offset the gains?
Yep.
Yeah, can I defer selling it for a while, or can I, maybe sell some way out of the money covered calls while I'm sitting on it to try to reduce the cost basis effectively, things like that. Yeah.
I love selling stinkers in the portfolio to net against gains.
Yeah.
I love doing that.
Yeah.
Clean it up a little bit and have a tax benefit.
Wait, you have losses? Weird.
I sold some stinkers last year to net against my Carvana trade gain.
Yeah.
Nice. All right. Next question. Any game theory thoughts around the supply crunch coming to Bitcoin? And this is from Code Monkey, Texas. If there's 1.8 million Bitcoin on exchanges, divided by 9,000 Bitcoin absorbed per day, that equals about 200 trading days of supply. So what do you guys see as the possible outcomes? And yeah, this is something that I talked a little bit about in today's article with, the amount of inflows coming into the ETF market. And I've even tweeted about this a few times, talking about like, what is the extreme bull case? And the word, I hate this phrase, but the word God candle keeps floating around. Where
Who's saying that? That's being said.
It's, on crypto Twitter, it's like, that's what people are waiting for, is a single day or a candle that, is up tens or hundreds of thousands of dollars in a day. Look, it's not out of the realm of possibility.
No.
I'm not going to tell everybody to go mortgage their house to buy Bitcoin because that's a guaranteed outcome. But whenever I see the flows that are coming into the ETFs and then how the exchange balances and the available Bitcoin keeps coming down, there is a non-zero chance that something like that does happen. So one thing I'm paying close attention to over the next, it's only been a month of the ETFs and there's been a lot of capital flowing in. We really need at least a quarter or two to see how sustained this buying is, or if it's just kind of a rush in the initial excitement and then it tapers off. What do you guys think?
I feel like we're just getting started, because do you know how many managed accounts for advisors don't have Bitcoin exposure in them?
Hardly anybody has Bitcoin exposure in accounts like that, right?
Yeah. And I just think that it's going to open up a whole new world for portfolio allocation strategies for people. I mean, there's a lot of money being managed, AUM, being managed. And not only that, the more it gets out there, the customers themselves are going to start calling their advisors and be like, hey, I heard about this Bitcoin thing, especially as it keeps going up. And
it's reflexive.
I think it is.
Buying begets more buying.
I think we're in the early stages of allocating. That's my take. But
okay, so what's your price prediction, or what kind of God candle are we going to get? You think about it, Trav. What's your take on this?
Yeah, I think it is worth remembering that holders will become sellers at certain prices. So where it's not like everybody's hodling forever beyond any level, like I'm sure we get some new sellers if Bitcoin hits 100K plus,
sure,
et cetera. So I'll just temper the enthusiasm a little bit. It's also interesting because, we don't know what the long-term daily, monthly, weekly flows look like into these ETFs. Just 2 or 3 weeks ago, we were talking about how the grayscale outflows were offsetting the inflows into BlackRock, Fidelity, et cetera. So now we finally got net inflows above the grayscale outflows. And if that continues at this rate, definitely looks good. Can't ignore that, especially with the, the whole narrative of the halving coming up. Like, we're in a nice sweet spot. Yeah, I'm definitely not raining on the party, because I definitely see right now a very positive setup, and I think it could continue to, go a lot higher and probably surprise people on where price can go short term. So,
yeah. And to your point too about like, eventually people will become sellers. Like in actively managed portfolios, rebalancing is a thing. So like if somebody wants 1% exposure and then Bitcoin goes nuts and it becomes 5, 10, 20% of the portfolio, do you think people are going to just automatically rebalance to 1%? Or are people going to say, no, this is nuts, I want to have a larger percentage in my portfolio?
I mean, a lot of people are on auto rebalancing schedules, or their advisors will auto rebalance, you know.
So is that then potential selling pressure?
I mean, I think that, like Trav made a great point. There's going to be it's just like, you know, there's going to be buyers and sellers forever in this market. Like, it's not like people are going to be holding their coins and never selling them. So
Some people,
not everybody.
Going blasphemy.
Some people will.
Yes,
but like people don't. Well, I guess people hold the S&P forever, pretty much. I don't know. I don't know.
You know, there's also like it's weird to think about the effect of inflows and volume on price as well, because there's not a one-to-one relationship between, say, you know, number of buyers versus number of sellers and what price does, or, you know, volume and what price does. Like, price can move without volume, or it can move with a ton of volume. And there are, you know, paper alternatives, things like futures that could potentially affect the price, you know, in certain markets at certain times that are maybe not directly related to the actual supply of Bitcoin, right? So there's sort of like that shadow supply that could maybe even affect what price is doing if people are screwing around in the futures markets or things like that. So it's not 100% clear what exactly plays out, you know, even if there's more demand on the buying side. But I think overall, as we're looking at it, it's looking pretty good at the moment.
Yeah, I agree. I mean, I've said this since early last year when Bitcoin broke from its downtrend into, let me pull up the chart here, when Bitcoin broke from the extended bear market of 2022 into the bull market. I said, like, throughout all of last year, I think it's dangerous to try to short against this. And we've seen short squeeze after short squeeze, and anybody that's tried to step in front of this train has gotten absolutely clobbered. And that's why I've been net long since, you know, really March of last year. And I always say, like, you can listen to the extreme narratives and tempered narratives, but you can listen to, you know, the Michael Saylors of the world that make a very compelling long-term bull case for Bitcoin, which I agree with a lot of what he says. You can also listen to the haters if you want. I think it's important to know kind of both views, but at the end of the day, price action is truth. Capital flow is truth. And the data is just telling us that.
Let me ask you a question. Do you think more or less people are against Bitcoin? Like, if you were to guess like a ratio of who's for Bitcoin and how many people are against it, like, I feel like it's going to be a bigger percentage for people that don't believe in it or against it.
10 years ago, people were calling me crazy for being in it. So it was 99-1. And then over the year, that number has shifted. I would say it's more are accepting of it now. Like there was a video clip, I don't know if you guys saw this today going around. Gary Gensler was on CNBC talking shit about Bitcoin, and the commentators are giving pushback. They're like very much, I think, more in the pro Bitcoin camp, where just a few years ago they would never say something positive about Bitcoin.
I asked because it kind of reminds me of what happened in the S&P over the past year, where everybody was super bearish on it, and then it ran, and now we're looking at an S&P where people are basically like FOMOing in. It hasn't barely taken a breath.
Yeah, because
people they didn't expect it to go higher, and now they want in. And I'm kind of seeing a rhyming pattern with Bitcoin where it's kind of like a huge short position. Like, more people don't believe in it and think it's like this fake asset than people that do believe in it and think it's real and a value, store of value or whatever. And so the more it goes high, the higher it goes, that could lead to this like FOMO situation where all those people, the masses that don't believe in it, they start to run for it. And then that's when you see that like God candle, as you said, where we're all sitting there like, I didn't expect Bitcoin to do this. Like,
Yeah.
just like we're sitting there with the S&P 500, like, wow, 20 times earnings. Shit. Okay.
And that's what causes those events, those extreme bull cases to play out, is you need a lot of skeptical people to be the buyers later.
It's all rhyming to me, and it feels like that's what could happen.
Yeah.
I see a lot in my day-to-day life, just talking to, your average normie. I don't see as much like outright negativity against crypto or Bitcoin, but I just still see, kind of complacency or maybe some curiosity too. Know a lot of people, I'll go play on the pickleball courts and get to talking with people. And oh yeah, I got a tiny bit of crypto here. Oh yeah, it's like a curiosity for them still. But like, yeah, what happens if you get the God candle? Do you have normies starting to like fund their Coinbase accounts again?
Well, it could be like last time, the last big run where everyone FOMO'd in at the top and then it fell on them. And this is why you guys need to be in the community.
This is why market cycles happen. And that's
Yes.
why,
You gotta understand market cycles.
everybody likes to make fun of us when we say like buy low, sell high. And it sounds obvious and it sounds easy, but nobody does it,
No,
right?
still.
Nobody does it.
Mhm.
Still.
So even today, after how many damn market cycles, it's the same story. Yeah.
Mhm. Mhm.
All right. We got a few more questions. Let's do a little fire round here. Got question. Hey guys, what do you think about the possibility of an ETH spot ETF? Doesn't it have to be a commodity like Bitcoin to be eligible? Yeah, they're delaying it. They're pushing it. I do think it's inevitable. Do you guys have an opinion? I think it's coming.
Probably.
Yeah.
Has BlackRock filed for it yet? If they have, it's probably coming.
Yes, it's coming, I think.
Yeah, I think so too.
What do you guys think of their recent parabolic NVIDIA move? Can it run higher or is it out of steam?
Trav?
Look, we just talked about how crazy performing assets can get crazier
Yes.
before it comes back to earth. I think that's definitely true. I mean, I think things like SMCI and NVIDIA are just going up almost every day at this point, and I can't tell you when that stops. I mean, those things were up when the market was down 2 to 3% yesterday. So yeah, I mean, it's wild, but in 1999, there were a bunch of examples where stuff like this, this went on for months. And they went up, 400 or 500% past what people thought was reasonable. So yeah, I think, even SMCI and NVIDIA, people are still making valuation cases for them because even after their runs, because they're growing so fast, they're only trading like 30 times earnings. Could they trade for 50, 60, 70, 80 times earnings? Yeah. I mean, I think it would be insane and they'll be down 75% from there at some point over the next couple of years. But yeah, I'm not trying to short these things. I can't tell you when they top per se, but it's wild out there.
It's
Yeah.
crazy.
There's risk on.
Yep.
It feels risk on-y to me.
Do you guys see US elections affecting the real estate market in any way?
That's an interesting question. That's layered because I don't think directly per se, but you could have shifting fiscal spending priorities essentially, or even just a totally different shift in the level of deficit spending, potentially if you got a shift from a Democratic to a fully Republican administration and Republican controlled Congress. So, I'm not of the belief that the Republicans would cut the budget deficit to zero. I don't think they have the discipline to do that. I think we've seen heavy deficit spending under both types of administrations. But again, you could have a category shift. You could have definitely some pressure to bring that down with a Republican administration, which could mean, that you have weaker economic conditions or, other types of economic environments than what we're in now, which could affect the market kind of on a secondary level. But I don't think I would be surprised to see a direct impact right away from what happens in the elections.
Makes sense. Thoughts on ordinals and the whole ecosystem built on Bitcoin right now? Yeah, so ordinals are interesting because let me just say,
Can you explain like I'm 5 ordinals for people? Because I don't think everybody knows
yes,
what they are.
and I don't think everybody would agree with me here, but a really basic explanation is NFTs on Bitcoin. So there's more potential use cases there. And I know a lot of guys in the community are super bullish on ordinals, and some have had some big trades on different ordinal assets. I'm still forming an opinion. I don't have a super bullish or bearish outlook. I'm still just kind of watching. It had its own hype cycle that's been cooling. But yeah, I think there's opportunity there. How sustainable is it long term? I think there's, just like every other niche or sector of crypto altcoins, there's boom and bust cycles. What will survive long term? I don't know. I just trade charts.
It's really interesting because ordinals kind of gunk up the Bitcoin chain in some sense. They create like higher fees and and do they have I can't recall if they have an impact on the actual time it takes to settle.
So it's a point of contention.
Yeah.
And you have a camp that says this is bullshit. Stop, stop increasing the load on Bitcoin.
Yeah.
And then you have the free market, which I tend to kind of agree with. It's like, let people do what they want to do. And in a way, it's going to, add more revenue for miners. And yeah, so I don't know. I just, again, I'm kind of neutral on it, maybe slightly bullish, but trade the charts and get in the community and look at the guys that are really deep into the ordinal space. And yeah, there's opportunity there for sure. I think so. Thoughts on potential for greater long-term centralization of Bitcoin on the account of the ETFs. So this is a concern that people have had that, the more Bitcoin that BlackRock holds, could they influence the future of the Bitcoin protocol and things like that? I do think that's a risk. But Bitcoin is such a global market, and we talked about this earlier. It's trading everywhere around the world. So I think it's a lower risk. Have you guys thought much about this?
I haven't thought deeply enough about it, but just thinking through about it here in real time, BlackRock doesn't really do a whole lot of activism with their investments. BlackRock, they own so much stuff because of all of the people who put, their 401k dollars into BlackRock ETFs. And so, the true holders on the back end are, individuals and companies that are putting their assets into those vehicles. So if BlackRock were to begin to do weird stuff, you could see a shift out of those ETFs somewhere else. Like if the market doesn't like it, they can shift out of BlackRock into Fidelity Funds or into ARK or whoever else.
They kind of hold the power. The investor holds the power really with their dollars.
Yeah. So that gives me some comfort that if BlackRock really wants to go, evil empire, that people can vote with their feet and get out of those vehicles.
Mm-hmm.
Yeah.
I don't know.
In your current strategy, what portion of your wealth is invested versus held in cash? So I think about this in a few different ways. And actually this week I did a webinar talking about my wealth machine and how capital kind of flows from cash flow and cash holdings into my active portfolio and my passive portfolio. And on personal cash, I keep about 3-ish years worth of fiat.
It's so different for everybody. It's like,
it is.
It really just depends.
Yeah. But my cash in my investing portfolios, that does fluctuate quite a bit. I'm like probably 60-70% or more fully invested in the crypto portfolio. What about stocks right now? Do you guys still have a lot of cash, or are you mostly invested?
Yeah, I've been generating cash. I still have cash waiting to deploy, but I'm saving it more for trading opportunities. But
I'm at about 15% cash in treasuries, just because we're getting 4.5-5%.
Mm-hmm.
So it's nice to be able to get paid. I'd feel more uncomfortable with that level of cash probably in a zero rate environment, but yeah, it feels okay for now. It gives that optionality for sure.
Cool. All right.
That's in the investing portfolio. And then, like you said, there's some cash set aside for the emergency fund and for just general life stuff that, I'm going to be okay with it, not earning much interest just because it needs to be there for use.
Yeah. Okay. Last question, then we can wrap it up. Would like your take on personal speculation of which country is going to accept Bitcoin as legal tender. I don't know. I'm not going to speculate about just random countries, but one thing I am paying close attention to that I think is really cool is Argentina right now. And the new president super pro Bitcoin. He's taken some big risks. He's taken a stand and he's said, inflation is a massive problem. He at Davos said some pretty mind-blowing stuff that I agree with a lot of what he said. So it'll be interesting to see how Argentina integrates and if they're able to kind of come out of the hyperinflation they've been having for decades upon decades. Do you guys have any predictions or thoughts about countries that could make a big change?
I think I would, if I had to bet on it or make a guess, I would have to say, a country like El Salvador or Argentina that has embraced that, or that has at least, or dealt with the problem of hyperinflation in the past, and they're needing to peg to something. I think it's probably more likely that they would keep the sovereign national currency and peg to something like Bitcoin. That's still a pretty far out idea, I think. I don't know if we'd see that anytime soon, but yeah, why wouldn't they think about, if they really want to solve the hyperinflation problem, pegging the Argentine currency at some point to something that's got a more stable supply?
Yeah.
Like Bitcoin.
And I think it only takes one medium-sized economy or central bank or government to say, hey, guess what? We've been accumulating Bitcoin, for that to just add fuel to the God candle fire. That's going to be the title of this show, is something around God candle.
There's a lot of capital. And Western investors don't think about the deep, deep pools of capital that exists in the Middle East or in certain areas of the world that we don't frequent as much. There are deep, deep pools of capital. I mean, Saudi Arabia, China. I mean, there are places where, those decisions are being made very differently, with far fewer decision makers involved, where, strange things can happen.
Yeah. That's a good place to leave it, guys. Anything you're looking forward to or paying attention to over the next week?
See if the S&P is going to get a real correction or not.
or just keep
pulling these like 15% retracements.
I mean, those aren't nothing. But
No, I mean like on the retracement Fibonacci.
Oh, okay.
Fibonacci.
Not a 15% drawdown.
No. Yeah, I've been looking at the Fibonacci, looking at the retracement levels, and they've just been so shallow.
Yeah, it's just been kind of grinding
October,
higher.
so shallow. So maybe that's going to continue. I don't know.
Yep. I know for me on the Bitcoin chart, we're less than 25% off of prior all-time highs, and there's a lot of open air here. So like we said earlier, I think we could close that gap pretty quickly. I mean, this is looking just
it's kind of hard to not
gnarly.
Be bullish on that chart.
If I was short, I'd be terrified.
I'm so afraid.
Yeah. I mean, there's some guys on Twitter that have publicly shorted and done videos talking about how they're so short. I'm like, okay,
good luck.
Good
we
luck
should
with
track that, do a tracker and follow up on that, see how they're doing
in
the next month.
All right. Well, guys, thanks for joining us today. Again, go to wetalkmoney.com/alpha to check out Seeking Alpha if you want to look at another tool that Travis and Nikki use. Also, go to wetalkmoney.com/community if you want to check out our wealth building community. Come into our Discord, do our live classes, all that good stuff. We got a ton of courses in there as well.
I'll be teaching a class in March on retirement accounts and just different types of accounts for investing purposes that you can strategize.
I think that's something people need, is like to know the flow of like, first start here with this account and build on, that's, we got a lot of questions on the webinar last night about that.
Yep. We're going to get that straightened out next month.
All right. TD, man, good to see you in person again.
Yeah.
The stock goat, I said on Twitter today. All right, guys. Well, thanks for watching, and we will see you next time. Take care.